Hello, Uncle Jim here. If you're near retirement and want to earn a really good passive income, a great way to do that is actually selling options. And I believe one of the greatest way to get started is to actually sell a covered call. I've been selling covered calls for probably 15 years, and it's given me the ability to be financially independent. So today, what I want to do is share with you how to get started and talk about how covered calls work. And actually, at the end of the video, I'm going to share with you an actual cover call. So stay tuned. I think you're going to enjoy what I have for you. Now, let's go ahead and jump into the details of what a cover call is. First of all, the reason it's called covered is you own 100 shares in a specific security. It doesn't necessarily have to be a stock, it can also be an ETF. Like I own SCHD, which is the Schwab high dividend ETF, and I actually sell options on it and do quite well with it. So that's the beginning part is you need to have 100 shares, and that's why it's called covered. And then once you have those 100 shares, then you can sell a call contract. So in a sense, the easiest way to think about it is let's use an example. So say you've got a stock like Cisco that's, say it's $40. You bought it for $40. Well, you can then sell a call on that. So you could, let's say you pick $45 for your strike price, and you could sell a call at 45 to someone else. So someone else would want to actually buy those shares from you for 45. So they will pay you for the opportunity to buy those shares. And you can pick different expirations. You could say, well, I want to do it in 2 weeks, 30 days, 60 days, 90 days, and keep going depending. Cisco's got a lot of expirations. So you can actually go as far out as 2 years. When you go out that far, it's actually called a leap. Um, and the farther you go out, the more premium you potentially can make, depending on where the strike is. So the farther the strike is out of the money. So again, in that instance with Cisco at $40, 45 would pay you, I don't know, we'll say $50. But if you sell it at $5 higher at $50, well, you may only earn 15 or $20 for selling that options contract. So, and again, at the very end of this video, I'll share with you actually how to do it, and we'll go on to Schwab and I'll show you how it works. But it allows you to, the way I look at it, it allows you to earn some nice monthly income. Or in another way to look at it is you're almost able to double your dividends that that company or that ETF is producing. So if it's, if it's someone like Cisco that's paying around 3.5% dividend, you potentially could double that and make almost like 7%. So it allows you to really put your stocks to use. And especially if it's a stock that typically goes sideways, doesn't go up a whole lot, doesn't go down a whole lot, and you want a way to actually earn some income, especially if it's something like I inherited some Coca-Cola that I inherited when I was 16. I'm 56 now. I'll be 57 next month. So I've owned it for many, many years. The cost basis is so low. And I'm just going to pass those shares to my son, but I can earn income off of them, not just with dividends, but actually with selling these covered calls. And I actually sell a lot of covered calls on Coca-Cola. And I do it all different expirations. I do it near term expirations, and I go all out as far as I can possibly go expiration wise because again I own quite a few shares. Um, and it's easy strategy to set up. It's fairly simplistic. If you can buy stocks and sell stocks, you can easily buy and sell options, and especially sell cover calls because again it's a fairly easy um, trade to set up, and once you've done it a few times it becomes second nature. And then I also like the fact that you can really balance the risk, so you can determine, like I do with Coca-Cola, that hey, Coke is $60 right now. Well, in 6 months I'm willing to part with it at $70, so I can look at it to a point where the likelihood that it's going to reach 70 is so slim or so small that I'm willing to sell options at that level. Or you could do it as what I like to call the delta or the Greek. So delta, the way I like to look at delta, and for calls, I like to use a 20 delta. So it's a 20 delta, but it's like an 80% probability that it'll expire outside the money. So with most of my options, call options, that is, I typically do along the lines of a 20 delta. With my put options, I do a little less risk. I do more like 10 to 15 delta, and especially during this bear market, with the market keep going, the fact that it keeps going down and down, I take a little bit less risk with selling puts. And I changed that. At first, I was also doing 20 delta with puts, but now I do a little bit less risk. But I've kept it pretty much at 20 delta for calls. And I mentioned at the beginning of the video, I've been selling options with Coca-Cola for nearly 15 years, and I really didn't know how to trade them at first. And I've only probably, I would say I've written maybe 300 contracts over that time period, and I've only had three or four ever get assigned. And those were assigned early on several years ago because I really didn't know what I was doing. I didn't know I could close them, I didn't know I could roll them. I just knew it was another way to generate some income. So, so the fact that you can balance the risk, you can use delta, you can say, what price you're willing to part with it at, it makes it relatively easy to work with and allows you to balance your risk and how you set up your risk. And then next, it's fairly easy to manage the trade. So as long as you keep track of it and you know when it's expiring, I always, a couple weeks before, will add those to my planning worksheet that I release. I release a planning worksheet to all my patrons every week actually, and I share what I'm managing. And also at the very top of my spreadsheet that I share with my memberships, I also share 4 to 5 stocks that are very optionable that I'm looking at potentially selling puts or actually writing calls on. So that's something I provide to my patrons. So if you're interested in potentially becoming a patron, you can look down below. I'll have links that where you can actually get to those, learn about what I'm offering for my 25. I call it my traders membership. I'm actually offering every week a 15-minute one-on-one with me directly. And that's something that new I've done. I was doing a weekly meeting, but it was always hard to find time for people to meet. So if you're interested in taking a look, take a look. My links will be below, and if you have any comments or questions about it, also post a comment. I try to answer all my questions I get on this channel. So with that being said, I think the easiest way to learn is actually jump right into it. So let's jump into that next part, and I'll share with you a company I'm looking at that I've recently had I had a put option assigned to me, and I'm going to talk about actually selling an option, a cover call on it after it had been assigned to me literally, I think, last month. So stay tuned. Let's jump into that next. Okay, I've opened up my Schwab account and I brought up Fidelity National Financial. This is a company that I've been selling puts on for a while. I did get 100 shares assigned to me, right around $45. So I wanted to share with you what I'm thinking about doing with the shares that I do own. Again, I can sell a cover call, one contract with this, and since it was assigned to me at 45, that's about what I wouldn't want to go below 45 with actually selling a covered call. Now it's fairly close to its 52 week, well, not quite its 52 week low, but it's definitely more on the low side of that 52 week range. Here you can see it's if you look at 45, it's been under 45 for quite a while. If we go back to, let's look at 1 month. Yeah, the highest it's been in the last month is 42. Again, 42.55 for the last 3 months. For the last 6 months, it did hit 50. So, and if it does go up to as high as 50, say in the next 6 months, I could probably roll the covered call and increase the value of the strike price. Roll it out and up. But it's been a long time since it's been over $50 or even up to $50. So let's do year to date. Same thing, right around $50.44. So at a 45, a cover call at a 45 strike would be, it seems like it would be a good value to put it at. I doubt it would quickly go over that strike price. So the trend analysis, again, it's right around 40. You can see the 200 day is 44. So again, most likely it would not go above that 45. Earnings have been okay. It has beat recent earnings. You can see here it beat Q2 by quite a bit, almost 29 cents. And let's look at dividends. Dividends are good, almost 4.5%. And I had mentioned in previous videos that a good rule of thumb is to try to double your dividend. So if for 100 shares I could bring in 176 dollars, so I could probably, if I could double that, I'm doing quite well. So with anyone pretty near retirement, if you can double your dividends, you're doing quite well. You can really at that point live off your dividends, and you don't need to sell your principal. Um, let's actually dig a little deeper into the dividends. So you can see they've been increasing them quite a bit. Even between 20 and 21, they increased it by, what is that, 16%. And it looks like they increased it to 44 cents last November. And before that, it was 40 cents. Before that, at 36 cents. So they're increasing their dividends quite nice. Again, they pay a nice annual dividend. The coverage ratio is really high, 421%. So they've got plenty of cash to cover the dividends. And here you can actually see the 3-year growth for the dividends is 9%, the 5-year 12, the 10-year 12. So, going for 10 years, they've been increasing dividends. And that's what I really like more so than a high dividend. I want to see a company that's increasing dividends. So even during this tough time, they've been increasing dividends, which is good. So let's go back up. Let me actually switch screens here. So let's jump into the actual chains, and we can see they don't have as many expiration days. If you look at their expirations, they have fewer to choose from. So I'm actually going to focus on trying to see if I could do, if I can double the dividends. And again, they were around $176. So let's see. So one day, let's actually not worry about the one day. Let's take that out. So here you can actually see I could do, if I did 40, I could pick up, and this is a little over a month, I could pick up $130. But that puts me at a fair amount of risk, and I'm $5 below what where it was assigned to me at 45. So that doesn't work for me. Let's go out to November 18th. Looks like I could pick up between $20 and 110, but no activity here. So let's go out to the next one. Here we have quite a bit of activity. A lot of open interest. Looks like 18 contracts have already gone today, and it looks like it's between $50 and $60, and that's for about 3 months, 93 days. So that's, if I did this every 3 months, that would bring in $200, 50 times 4, and I probably would get between these two, so I could even do better than doubling my dividends for the year. So this is definitely an option that I could do. Let's actually go out a little farther. Let's look at the March 17th. And for March 17th at 45, I could bring in 115. So this is like 6 months. And so again, the dividends are 175, so I could double it in that time period, which isn't bad. And let's see what let's come back up and let's switch this to Greeks. So at 45, you can see how low the delta is a zero point 0.8 delta. This is the one I was not looking at because it's 20, between 20 and 110. This is the one that really had very little open interest. It's showing a 20 delta. And here's the one I was looking at, the 93. So it's a 19 delta. It's right around where I want it to be at 45. So I could select that. This is what I like to do, which is probably a little convoluted, but I'll switch that to calls. And I'll come back and I'll say I do want to trade it. And let's just widen that a little bit. Don't want to be showing my account number if I can help it. So here for a call, and I only have one of these, so what I could do is set this to 45 so it's set correctly. I could do sell to open, so I'm opening this covered call, and I would bring in between $50 and $60. They're only guaranteeing, I believe, the 55, but again, that would be almost doubling my dividends in a year. And I could do a market order, mainly because, again, I don't want to be trying to do this with limits and make an extra couple of dollars here and there. So I typically like to do it as a market order, and I can then review the order. And it's telling me I don't have any cash to trade, but that shouldn't matter because I do own the shares. Actually, I'm not sure I'm in the completely right account. Hopefully I am. But at this point, it's saying I'm guaranteed 50. I could actually come down and place the order, change the order, or do not place the order. At this point, I'm not going to actually make this order. I'm hoping that the market bounces back. If you can look at the bottom of the screen, it's actually, I don't know if you can see it. It's actually, now you can. It's a down day for the market. So I'm probably going to wait and do this on a different day. But even if I did this today, I could pick up $50, probably 50, 55. And if I do that every 3 months, then I'm definitely doubling my dividend, which is one of the standards I'd like to use. So at this point, all I would do is place the trade, and it would show a status of occurring right away with the market status. So this is, you can see how simple it is. Just a few clicks here and there, and I'm able to sell this at, sell a call at $45. It's relatively few steps. Of course, like I said before, you have to own the shares um, that you want to sell a covered call on. That's why it's called a covered call. If you didn't own the shares, you would be doing what's called a naked call, which is a lot more risky. So I hope this is understandable. If you have any questions, please leave a comment below, and also share with me any covered calls you've done recently. I'd be curious to hear what people are selling covered calls in. So hope you enjoyed this, and hope you come back next week. Thank you.